Perth was the hottest property market in the country in 2024. But is it already cooling off? Prices surged 24%, but now growth is slowing, demand's shifting, and everyone's wondering, has Perth run out of steam? Let's take a deeper look. Hey, I'm Lloyd Edge, property investor, author of Positively Geared, and founder of Oz Property Professionals. I've helped everyday Australians purchase over $2.5 billion in real estate, including in high growth markets like Perth. But no market stays hot forever. In today's video, we'll unpack whether Perth's incredible run is nearing its peak or if there's still growth left in the tank for savvy investors. Let's rewind a little. In 2024, Perth's property market skyrocketed. House prices jumped 24.2%, units climbed 21.4%, and median values surged to $745,000 by December. Migration was booming, supply couldn't keep up. By early 2025, Perth looked unstoppable, and investors flooded in. But now, growth has started to moderate. As of 2025, dwelling values are up 8.6% year on year, still healthy, but down from the double-digit highs. The Real Estate Institute of WA is now forecasting house price growth of just 5 to 10% for the year. So the question is, are we nearing the top? One of the first signs that a market is peaking is when prices begin to flatten or slow. That's exactly what we're seeing in Perth right now. It's still growing, but not with the same intensity. On the property clock, we could be hitting 12 o'clock, the peak, which often signals a coming plateau. Western Australia is forecast to build just 16,800 homes in 2025, while the population is expected to grow by 90,000. This massive supply shortfall is still applying upward pressures on prices. So while growth may be slowing, it's not stopping because there's simply not enough housing. Perth's economy is still performing very well, thanks to resource exports and infrastructure spending. That stability underpins housing demand. So while the pace of price growth may cool, the fundamentals remain sound, which gives long-term investors confidence. One metric we watch closely is auction clearance rates. If sales slow down and clearance rates fall, it can indicate a shift in buyer demand. Right now, Perth's clearance rates are holding steady, but if we start seeing a sustained drop, that could be a red flag. When buyers rush in after media hype, we often see FOMO, fuel the boom. But the flip side is just as powerful, fear of overpaying. And in a market dominated by investors like Perth, if investor confidence wobbles, many pull out at once. That's when markets can turn quickly. Here's a sign we're watching closely: rental yields. If prices rise too fast and rents don't keep up, yields fall, and that makes properties less attractive to investors. We're starting to see that compression in some Perth markets, and when yields fall, investors look elsewhere. The RBA is expected to lower rates further this year, which could support more growth, but lenders are also tightening buffers, making it harder to borrow. If borrowing slows, price growth often follows. It's not just about rate cuts, it's about how banks are assessing risk. We recently helped a client named Jason. He was planning to invest in Perth's outer suburbs where prices had just jumped 30%. On paper, it looked strong, but when we dug into the data, we saw yields were compressing and vacancy rates were beginning to shift. Instead, we found a better opportunity in gentrifying pockets of Adelaide where growth was emerging and investor competition was lower. The lesson? Markets don't move in straight lines, and timing is everything. Buying at the top of the market can have serious consequences. You risk short-term value declines. Yields might compress, reducing your cash flow. And if lending tightens, you could be stuck with an underperforming asset you can't leverage. That's why it's critical to understand where the market is in its cycle and not just follow headlines. So how do you assess if a market is at its peak and protect yourself? 1. Watch growth trends. Is it flattening or still accelerating? 2. Look at rental yield versus price. Are they aligned? 3. Study auction clearance rates and sales volumes. 4. Keep an eye on lending policy shifts. And 5, understand market psychology and avoid herd behavior. When in doubt, zoom out. Growth might slow, but fundamentals matter more than FOMO. If you're considering buying in Perth or anywhere, make sure your strategy aligns with the market cycle. Hit like and subscribe if you found this helpful. And if you'd like help reviewing your next investment opportunity, whether in WA or beyond, download our free market timing checklist below or book in for a discovery call with our team. I'll see you in the next one, and remember, timing the market is important, but strategy always wins.